What's up, guys? So today we are going to get into Fibonacci. I've been waiting for this day. I've been waiting for us to get into the Fibonacci parts and the Fibonacci levels. So as today, as we are getting into the Fibonacci levels, um, so basics of you getting into the Fibonacci level is that first of all, you have to know market structure, right? If you know market structure, you are also that our Fibonacci will just be easy peasy for you. It won't be nothing. It won't be, nothing crazy. Let's get into the chart. So, okay, just ignore this for now. This was my previous trades. I know probably this looks like a mess, but for me, it just looks really good. I think I should have just stayed that's how, yeah. I just remove this for now, then I'll come back. But I think I'm gonna need that. But yeah, I'll just show it. And that's enough. Now let's just get into it like this. Um, let's go bullish. You know. Mm. Okay, so right now in front of us we have a bullish trend. We have a bullish trend, and with this, you are going to take your Fibonacci, and as you take your Fibonacci, you're going to connect it to the lowest swing point when it is going in that bullish trend, right? So let's get into it like this. So right here we have a bullish trend, and whenever the trend or when the movement pauses and makes when the bullish trend makes a pause or it makes a retracement, which is going to be this part right here. Once the price stops, around maybe let's say 50% and the 60%, which is these two are called the golden ratio levels right here. This is the golden ratio area right here. So this is the most if you get this part, you got the best price. You got like the minute when you get this price, just take it and just ride with it. Don't think that you wanted to touch the 78 or this is what you're hoping for, and then when it gets here, you're still gonna then you didn't catch the trade. No, don't do that, right? So Fibonacci, it helps you to catch proper pauses, proper retracements, and with that also it is very good when you also have in the background maybe support or resistance. I'll show you like this. Take this as a resistance. Let's say price right here. Let's say price hasn't broke above this high, right? So price just made a high low and then price is going, and this is resistance. The minute when price breaks above it, now this part, the resistance now turns into support. The law of polarity, resistance into support. The minute when price breaks it, this changes into being a support. The minute when this changes to be a support, now we just have to expect price to come and retest this level, or sometimes it might even go low depending on the volatility of the market or which session that you chose. It might be a New York session, because most of the time New York session is the one that is highly volatile, especially in pairs that are combined with the US dollar. See, for example, now your confluence at this point, you have a bullish movement, and then when you have a bullish trend, you have the golden ratio. It hit the 50 Fibonacci level percent, and then also at the background you have your support. This is it, and also this is considered the golden ratio level. The minute when price gets here, what do? You just enter right there, and price stops. Maybe you get a what do you call this? Maybe you get a candlestick pattern. Maybe it made a doji, or it made an engulfing bar. Maybe it made a harami pattern, whatever pattern or however that you use to catching retracements. You can add you can just add your Fibonacci into being part of the confluences. You understand? And then also the levels that you're taking your what do you call this? Your take profit. It is the 0%, the negative 27, and also the 60. I mean the negative 61%. That one right there. These are your take profits. 0%, negative 27, negative 61%. Those are your take profits, right? So now let's go to vice versa with the movement. What is it? Okay, okay. Now let's do it with the downtrend. Oh, uh, oh, 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 I hope I'm not stretching them that much. Though. So right here we have a downtrend, right? As we have a downtrend, you are going to take a Fibonacci and connect it to the lowest part of the starting of the trend and to the lowest swing, right? Like this. And there you have it. You have your golden ratio level touched right over there, just like this. You have it just like that. And the moment when you see a candlestick pattern, you enter. After you enter, just like that. Let's say maybe you had a candlestick pattern and then you just put your stop loss right there, and then there's it. Just you see you hit TP1, TP2, TP3, then that's it. This is how we trade Fibonacci. And also you need to combine it with what your top well, depending on what strategy that you're trading, you just have to go with the trend. When you're using Fibonacci, go with the trend, because if you're using Fibonacci and you think that just because you had a pause and you think that it is gonna go your way, nope, don't do that. I'm gonna give you examples. For example, right here, we had I cut this move right here. I'm gonna show you. It was in the middle of the night right here. I will show you this one. Say you take your Fibonacci to swing low, to swing high. Also, yeah, also this one I did catch it, but it was okay. Let's start from here. I caught this one in the evening. I caught this move in the evening right here, and then I took my. I saw this part as a as a support, because it basically, from the background you can see that it is supporting the support. My confidence of saying that this is a support. So I took my Fibonacci, which is the 100% to the swing low and the 0% to the swing high. And when you're doing that, you just have to wait for price to give you a proper swing high. You cannot just, let's say for example, you put it you just saw this one candlestick and then you just think that, okay, I'm gonna just put it like this without it maybe closing, or maybe closing above, breaking above the structure or something like that. You have to see it by connecting it, and you have to at least like see one candle that closed as bearish, or sometimes it can just go down and then hit and then just go up. I know, but sometimes you're gonna catch the move, sometimes you're not gonna catch them. That's how the you guys know. This is just how the game is, right? So as you can see, you take it like this, you put it like this. TP1 has hit, and TP2 has hit, and TP3 has hit, and also this also you could have also re-entered right over here. This also matches up with the support. As you can see, this also matches up with the support. You could take your long position right over here, and then you take I don't know why these things like to being so high, bro. And then you take your stop loss and put it right over there, and you come back and you put it like this, right? As you can see, now you have your your risk reward ratio, which is just 1:2.3 6 risk reward ratio. That there you have it. Understand? This is just how you do it. And then you continue again. Let's say you cut this one, maybe during these times it was up. Let's say you cut this one. I want to get rid of this, not you. Then let's say you took a Fibonacci and put it up like this. Then now you also see it, and also your Fibonacci levels. These Fibonacci levels act also as your support and as your resistance, depending on how you plotted it. Let's say you plotted it. I'm not gonna go. I'm not trying to confuse you guys, because I know that sometimes it could be so confusing. But I'm gonna show you in. Let me see. I don't see anything yet, but I'm gonna show you in the bit. No, I think it can also work, but before this, you just restart, like I showed you, you just restart you reset your whole entire chart, and then you make sure that everything is fitting nicely. Let's say maybe this part was left out, and then you resize it basically into being something great that you can fit the Fibonacci. Take it, remember what I said, swing high to the lowest swing. This is, I'm just showing you this, right? Don't just ignore this. Ignore this. I'm just showing you this. I want you guys to see that you can also look at this as a what? You can use it also as a, and basically also what you need to do is copy these levels that I've placed right in front of your eyes. Is you need to change your levels and put them exactly how I put them. They'll help you a lot the way they are. I don't know the first time of using the Fibonacci levels. I don't remember how it was. I might go on the website and see on the trading view app without logging in how it is. But I definitely know that there are some edit levels. Maybe this one is active and the others are active. You just have to clean them out and add these levels, negative 27 and negative 61.8 level, these ones, and then put them accordingly properly. Then afterwards, let me show you like this with the background. But with this one, when I'm trying to get my support levels and my resistance level, I don't wanna I don't want those levels. I'll just place them when I'm doing this. You see this? That's how I'm just gonna place them. Understand? So at this point, what you're seeing is you are going to get your support and your resistance very clearly. As you can see, when price gets to these key levels right here, the support and the resistance, these levels of the 50% and the 61% and the 78%. Price is reacting to these levels. You see, once price gets to them, there's some hesitation happening. The moment when you see no hesitation happening, just know that at the next part of that trend, you are supposed to act the very same way. Let's say, for example, how can I show you? Uh, UJ, I know UJ is crazy. Let's say, yeah, let's take it like this. You see, at this area right here, price just went crazy. It just passed that level, right? And I know it's not gonna happen a lot, but most of the times it happens. Wait, what's happening? I don't know what's happening. You see what happened right there? I'll show you with this one. Price also is just gonna do whatever that it just did. Not always, but frequently it is gonna do that. Let me also show you with this part. It's not what's happening. It's not that much, but it does happen quite frequently. It does happen You see this? Let me show you this part. Yeah, right over here. You see this part? It happened. It happened. And you'll see it. You'll see same thing right over here. No, not there. See right over there? It just passed and also right over there. You see? One, two, pass. And also right over here. See right over here? Pass. Same thing. Pass, pass, pass. It happens. It just happens. It just really happens. You see this candlestick right over here. Let me get rid of this Fibonacci. I wanted to show you something, but yeah, I can start it. See right over here? Passed. See, passed, passed. Like, do you get it also? Look at here. Passed, 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 passed. Like, it's something that happens. Like, you just have to train your eyes to see the whole pattern of how these things work. But at the same time, just ignore what I've just showed you and just focus on the the part that I've showed you on the basics on how to use Fibonacci. Understand? But also keep in mind that Fibonacci, you can also use it for your support and resistance. Never ever forget that. Because also the moment when these levels just keeps on showing up for themselves, they are just they just can't be there. You understand? Take it like this. Let's take it like this also. See what happens? Look at that background. To make it clean. You feel me? You see it? See the support, this whole hesitation level right over there. That's a support. It was resistance. It was resistance. Price broke above it, made a turn it into support. Then now price broke down. Then now it is turned again into what? Resistance. Until this point right here, also resistance. Price just keeps on touching this level. This might be a key level on which on the 1 hour. It might be a key level when you go into the smaller time frame, but the key levels I've put them nicely. I've placed them nicely. Every time when price comes right over here, it's either price breaks or price it is going to hesitate. You see right here? See right here? Every time. Let me show you guys. Every time. Key levels, important. Look at this. Look at this. So, key levels in terms of support and resistance, in case if you're wondering. But on the bigger time frames, these levels are basically like the levels whereby like once price gets there, you are expecting big movements, something huge to happen. You see, for example, right here, price touch right there, hesitation. The moment when you see that hesitation, look for what you call this, for a signal, something. Look for a type of signal. No, I took something wrong. Just take your Fibonacci and place it down like this. You see what happened? The golden ratio. It was retested. After that golden ratio was retested, maybe you had your support right there below at this wick. And then what you're going to do, maybe you might be taking out those highs or just maybe you just good with the negative. I mean with the 0% then. Okay, cool. You take a profit, or maybe you put your second profit right there, or you're just aiming for the high. If you looked at the bigger time frames, you see? If you look for the bigger time frames, you could have been good with taking that high out and just being like, okay, cool, that's nice. And also looking at the bigger time frames, it just gives you the entire view on what's happening on the smaller time frame, so you can be confident into taking out that high right over there. Understand? So as you can see, guys, on the Fibonacci, you took it from your swing low to your swing high. Wait, what happened? From your swing low to your swing high, and then look what happens at the golden ratio level. Let's say you entered right over here. The minute when you have entered right over here, your what you call this, your candlestick pattern um indication for you to enter would have been this doji right over here. If not doji as a whole, it could have been this, just that the higher low. You could have entered right over here, or you could have drilled to the lower time frame. The minute when price made a higher low, you could have done this and put it like this, and then there it is. You have your 1:4.21 risk reward ratio, and then if you had took maybe price for your second TP, you could have had, you see, 1:6.41 risk reward ratio. That's it, just like that, just like that. And same thing on the downtrend, same thing on the downtrend, vice versa, guys. You just get to get your confirmation from the, most definitely, I trade top down analysis, so I start from the higher time frames to check my confluences on what exactly is happening. Let's say, okay, I didn't look at, yeah, but let's say we are trading, New York session. I'm gonna go ahead to go to the daily, and we say, okay, we have a high. We made a new high, and then this is our support. High, higher, low, high, which is, this was on, what do you call this? Was on Friday. Price made a high. It didn't break above the previous high. So we noted that, okay, price made a high, which did not break above what? The previous high. So now we say on bullish, I mean the daily, we say it made a high. It is bullish. We are not. We are standing at the same time. We are neutral, but we say it made a high. We cannot say that, okay, it is now bullish or it is whatever. We say on the daily made a high. But if price had just made like a higher low, okay, we know that price now it is bullish on the daily, or if it just made a high like this, we know, okay, price is bullish on the daily, but we know that price just eventually have to retest this turning point, right? And I have to change it and turn it into, on Friday, I didn't trade USD, I trade Bitcoin. Then we're just gonna say resistance just like that. And okay, now we go on the fall. We're gonna start right there. High, higher, low, high, low, lower high, low, lower high, low, high. Price made a new high by breaking above the previous lower high. That's a new high. Higher, low, high. Now you get the pattern, right? On the daily did not break above the previous high. We have a high on the daily. On the daily, we have a high, and on the 4 hour, we also have a high, right? We have a high. Price did not break above the previous what? High, which is, it happened at 8 a.m., right over there, 8 a.m. And then when price gave us what? A high, now price did what? Let me show you guys. Now price broke this high low. Price gave us a new low. That's a low. Now we have a low. That's it. Now we have a low. Now we actually have a direction. 4 hour, we are bullish. The daily, we are neutral, which is, at the same time, we are no longer neutral because the 4 hour is supporting us on saying that now we have actually almost a clean bias on actually what is happening, right? Or if you're not getting a more proper daily bias, you can go to the weekly to get your more support. And you understand, you can go to the weekly and get your more support. We say, okay, cool. The weekly had a high, right? The daily had a high. So most of the time when the daily and the weekly had a high, when we go to the 4 hour, we have what? A new low. We have a new low, and then this is also for swing trading purposes. Now this is where you're going to execute your trade, like clearly. if you're trading on the 4 hour, because the weekly is bullish, the daily is bullish, and then the 4 hour made what, a new low. So come on, we're gonna sell right over there and put the stop loss probably above right over there, and just let price do its thing, taking out the lows right there, taking out the lows. However, when you see price, whatever that you see price fits to do, that's on you. Understand? If you see price coming to the daily resistance, that's where you're gonna go. But for me, I like taking down the lows because, amen. But definitely, I do see price coming right here. Um, right. But we are day trading. I'm showing you for day trading purposes. Remember the daily, right? Back to the basics. The daily made a high. The 4 hour made a low. Now 4 hour is bearish. 4 hour is, I mean, yes, the 4 hour is bullish. I mean, it is bearish. Bearish meaning that it is downtrending. It is going down, right? It is going down, as you can see with the Fibonacci. Fibonacci also tells you that, come on, the Fibonacci also tells you that, brother man, we are going high, and you cannot deny that. Understand? Look at it. It is what? Where is it? It is at the golden ratio Fibonacci level. Come on, come on, come on. What are you doing? Come on. Now we go into the 1 hour. The minute we go to the 1 hour, what do we have? We have some beautiful price, guys. We have some really, really, really beautiful price, and you cannot deny that. We have it. We have it right in front of us. We have a high, higher, low, high, low, lower, high, and then let me see. Yeah, high, higher, low, high, low, lower, high. Because why? Price is representing what? Basically, let's just say not lower high because it broke above the previous high. So let's just say this is a high, basically. That's a high, that's a low. And then when price made a low like this, and then now, remember the bigger time frames. What did the bigger time frame say? 1 day gave us a high, 4 hour gave us a bearish momentum, and then the 1 hour. Now on the 1 hour, what we are doing is we are here to confirm the entire structure that we had on the daily and the 4 hour, right? Before you execute, you need to also get your uh indication, or maybe your, how can I put it? You have to have a signal before you enter, right? Before you enter, you have to have a signal. Let's say maybe put it even here. Mention the wick. Remember, highest swing to lowest swing when you're going down, vice versa when you're going up. Okay, so there you have it. This is your level right over here. This was your support. Now price broke that support. Now support turned into resistance. So this is where you're going to enter, and this is where your stop loss is going to be. Day trading purposes, and then there we go. But if you are smart and you looked at it from the 4 hour, that's what you're gonna do. You're still gonna go ahead and target what? The lows, guys. The lows. The lows. Look at it. Which is the lows. This is the first one. This is the second one. This is the third one. That's it. Maybe let's say you're good with the 0%. There you have it. It is at the 1:4. Beautiful, beautiful things. Very, very beautiful things, guys. As you can see it. And one thing that I like about this method is that you can literally, hey, One thing I like about this method is that you can literally apply it to anything. You can apply it to the any type of pair that you want. As you can see, I also applied it on the Bitcoin Friday night, right over there. You see it? Beautiful things. Beautiful things, guys. And TP hit right over there. Beautiful things. Understand? I hope you guys enjoyed this. I know it's long, 30 minutes, but I tried to put every type of information out there nicely. And yeah, man, you know, hope you guys enjoyed it. Wait, I just saw something. I just saw something. Wait, wait. This might be something good. I'm waiting for price to go to. Okay, wait. Okay, so guys, this has been a very beautiful episode. I hope you guys enjoyed. Basically, this was just not only based on Fibonacci, this is also based on top-down analysis and market structure. So I hope you guys enjoyed it. Cheers.